It's never a quiet day in the markets. We got some more inflation data and we also got some more tariffs. In today's video, we'll be going over exactly that and how it affects the price action of Bitcoin, but I'll also be taking you through a more medium to long-term approach to crypto and Bitcoin specifically. If you enjoy the content, make sure to smash that like button and subscribe. Let's jump right into the video. So here's the data that came out today. The US initial jobless claims were actually lower than expected at around 220,000. The expectation was 226,000. Then we also have the core PPI month over month, which the actual was negative 0.1. Expected was a positive 0.3%. And for the year over year core PPI, we had 3.4%. The expected was 3.6%, suggesting that inflation is indeed cooling down. Now, why are the markets tanking? Bitcoin is now sitting at around 81.5K, still seeing resistance at this blue line, which is the 200-day moving average. I will zoom out a little bit and look at the daily time frame just to show you what we're working with, but it's very much the same case. We have highlighted this region for a very long time, and now we are still holding the 200-day moving average as support. Every time that we've tapped into this level, it has marked a pretty solid shorting opportunity for Bitcoin. As we can see now, we bounce directly off this level and straight downwards. That reminds me, if you want to trade this price action, make sure to click the first link in my description down below. It brings you directly to weeks where you can earn a 50% deposit bonus. That means that if you were to deposit just $2,000 to your account, you would get $1,000 back for trading purposes. And if you are a pretty regular trader and you contribute to a lot of volume, you can of course win a ton of prizes with this volume, as much as a Rolex, which is some pretty solid prizes just for trading crypto as you normally would. Once again, it's the first link in my description down below. Now, back to the Bitcoin chart. Again, I have not been longing this price action. It has not been looking solid, especially after we moved outside of this range, and now the 200-day moving average is holding as resistance. So please make sure you consider that when you're trading. Now, here I have some more tariff stuff to share with you, which obviously goes hand in hand with what's been going on with inflation. Now, President Trump just came out today and said he will be placing a 200% tariff on all wines, champagnes, and alcoholic products coming from the EU if they do not cancel their 50% tariffs on whiskey. This trade war is going a lot further than most people have expected, and naturally this also contributes to the dire price action of Bitcoin. And one would think that that's also a pretty decent reason for why Bitcoin has dumped on positive inflation data. Here are some current thoughts on the market that I couldn't agree more with. What you need to consider here is that 1. Inflation data is moving in the right direction, but is it actually good for the stock market? Both CPI and PPI inflation data, headline and core, fell more than expected in February 2025. This was the first major piece of economic data under President Trump's trade war. Immediately after this, Trump posted egg prices are down, oil is down, interest rates are down, basically applauding his own policy moves. As we have seen, the market has had a very muted reaction to inflation data that would have previously sent the S&P 500 sharply higher, and of course this also includes Bitcoin. Normally when we get this positive inflation data, Bitcoin starts soaring and starts putting in a new leg higher, but this has not been the case, and it's mainly because there is so much market uncertainty at the moment. And furthermore, the current data provides President Trump a reason to keep doing what he's currently doing. Had inflation rebounded, Trump would have faced backlash as attention would have shifted to the inflationary natures of tariffs. Now, the trade war can carry on while Trump will claim that he is reducing inflation rates and the trade deficit. And again, as it's put here, this is exactly why markets are not recovering losses following some of the best inflation data that we've seen in months. Lastly, it's also clear that President Trump knows economic weakness or even a recession is the fastest solution to inflation. So what can we get out of this? I still think the market conditions will be very difficult to see any kind of bullish momentum. But that does not mean that we will not see some more volatility. I think that we will likely see volatility in both directions, especially as a ton of shorts are piling up on Bitcoin, which we will cover in today's video. Now, before we get into the more medium to long-term stuff, we do have to have another chat about Ethereum. Ethereum has faced record active selling over the past 3 months. This is not a pretty sign for Ethereum. So in line with this data, you might want to know what my personal targets are for ETH and where I will be accumulating. Now here what I'm showing you is a regression band that represents Ethereum. And we can see that in every single cycle, we've had these major peaks above the regression band, but we ultimately come right back down to retest the bottom of the band. What you can see here back in 2016 is that we came back all the way down in December and retested the bottom of this regression band. We also had a ridiculous wick here, but this was back in Ethereum's early days. And then the next cycle, we once again tested the bottom of that regression band, and we actually wicked quite a bit lower back when Ethereum dropped below $100. It's crazy to see that Ethereum was at those valuations just a few years ago. But anyways, now we have recently entered into this regression band. So what does this mean? Usually we can see some kind of consolidation around the middle of the regression band if the market continues its extended downtrend as it's been doing. So that would be right around $1,500 for Ethereum. But knowing what we know with this regression chart and the fact that we can actually come back down to the bottom of the regression band, where would that put Ethereum? That would be all the way down to just above $1,000. Now hear me out. I'm not necessarily calling for a $1,000 Ethereum, but I would say that anything near the $1,600 and below range would be very attractive to accumulate Ethereum if you have any stables available. Of course, this is not financial advice. This is just exactly what I am looking to do. If Ethereum starts dropping here and it drops lower and lower and lower into its regression band before it explodes back out, because I will remind you, the lower that we go into this regression band, the more likely it is that we see a big pop and Ethereum will be going to new all-time highs. This is just my personal conviction. Everyone on crypto Twitter seems to think that Ethereum is over and all the other ecosystems have been overtaking Ethereum. Solana has replaced Ethereum. I don't buy it. I think that Ethereum is here to stay. It's the platform that institutions will be building on in the future. So you can disagree with me if you want, but regardless, this would be very deep level for Ethereum, and I will personally be accumulating more and more the lower that we go once we hit the $1,600 range. I hope that we actually get to this level because I think that it would be an explosive move outside of the regression band. And of course, we won't just go straight down immediately, but if you'd like to trade the current price action of Ethereum, make sure to click the first link in my description. It brings you directly to Weeks. And I forgot to mention, you can sign up with just an email and a password on top of all of those awesome bonuses. Okay, so that was a quick recap on inflation, tariffs, and how Bitcoin and Ethereum have been currently doing and what I'm looking forward to in the market. Something else that you do need to consider is the fact that Trump came out and said that his priority is not the short-term price action of the market, but he is trying to build sustainable growth in the medium to long term. Basically indicating to us that he doesn't really care if the market nukes immediately, which is in line with one of the theories that we talked about in one of my previous videos. For Bitcoin though, how is the long term looking? Well, first of all, before we get into that long term, we have to look at the spot Bitcoin ETFs. We can see that we finally had a positive day, seeing $13 million in inflows, which is really nothing because as we saw early days in the Bitcoin spot ETFs, there was billions of dollars in inflows. So this is pretty insignificant, but it might be signaling a reversal. Now, in the more medium term, something else very interesting that could be impacting the crypto exchange Binance came out. The Trump family has been in talks for a stake in the crypto exchange Binance, according to the Wall Street Journal. Considering that this would mean that the president and his family are involved with the largest crypto exchange, I mean, I don't have to tell you what that can do for crypto. And some positive signs in the medium to long term here. We can see that Argentina has moved to issue an Interpol red notice for Hayden Davis, who is the alleged mastermind behind the Libra crypto collapse. We've talked about this one at length on the channel, but I just thought I would provide you an update because we're finally seeing that crypto is potentially starting to heal itself. Now, personally, I think that these are devastating events, but of course we try to take advantage of them, and that's why we've been talking about on the channel over and over and over again how we've been shorting these kinds of cryptocurrencies and making insane profits doing so. So once again, these cryptocurrencies are usually getting listed on Weeks first, which is the first link in my description down below. So if you have any interest in trading these cryptos, whether you're bullish on them or bearish on them, make sure to sign up with the first link in my description. And this is a great one for the long term that I needed to share with you. So Senator Loomis has reintroduced the Bitcoin Act. Obviously, this needs to get congressional approval, but I just thought I would run through it with you to discuss the current changes in this act. So the first change that she's proposing is purchasing Bitcoin. So the 2025 Bitcoin Act sets a more rigid 200K per year purchase schedule rather than up to 200K, which was set in 2024. So if they are to buy 200K Bitcoin per year, that would be over the course of 5 years, achieving that 1 million Bitcoin threshold. Then we have a mandatory HODL period. The 2025 Bitcoin Act has a stricter HODL requirement than the 2024 version. Previously, there was an exemption for retiring federal debt instruments. That has been removed in the current version. Very bullish if this gets passed. Exchange Stabilization Fund. The 2025 Bitcoin Act provides coordination with Bitcoin purchases made through the ESF. This was absent in 2024. What this means is the ESF is a Treasury Reserve Fund containing around $39 billion. Executive Bitcoin acquisition would likely tap into this treasury. Then we have the gold revaluation. This one is very interesting. Both versions of the Bitcoin Act propose revaluing the Federal Reserve's gold. However, the new version explicitly says that the proceeds should go towards acquiring Bitcoin. In 2024, the version just had this dollar going into a general fund. And what's mostly the same in this Bitcoin Act is a quarterly proof of reserves, a voluntary state participation, and funding by redirecting Fed earnings. Look, there's a lot of things that have to go into play for this to even be approved, but I think it's already a great step in the right direction. And more medium term, you know I like to look at the liquidation heat maps. Now, what we can see here is that at around 92.5K, there are $7 billion in liquidations. Billion. I'm not proposing that we will just pump here and grab that liquidity before moving down, but it is very interesting, and I do think that we should be expecting some kind of volatility in the coming days and weeks, especially with the Fed meeting next week. That one should allow a lot of volatility, and I think in that case, a lot of people will get wrecked. Then we also have a different stance. The Russian central bank said that President Putin instructed Bitcoin policy shift. It's very clear that despite the negative price action that we can see on the chart here, the nation FOMO is really heating up. Now, I've always been one to say that we will be revisiting lower levels, and I told you my targets, around 73K. Can we get a ton of volatility in the meantime? Yes, of course. But I wouldn't want to be in longs. I know we just looked at the liquidation data, but it makes no sense to be blindly bullish until we can confirm higher support levels. So for now, I have still been favoring shorts, but you do need to be careful as the liquidity starts building up above our current levels. And the last thing that makes me exceptionally bullish on the long-term price action of Bitcoin is, of course, looking at the Bitcoin halving. This just puts things into perspective as to how early we actually are in Bitcoin's life. If you're ever doubting how early you are, look at this. Genesis, the block reward was 50. Then we had the 2012 halving, 25. Then we had the 2016 halving, block reward 12.5. Then we had 2020, 6.25. Then we had 2024 last year, 3.125. The rewards are getting smaller and smaller and smaller, and Bitcoin is getting more and more scarce as adoption heats up. What do you think will really happen in the next 10, 20, or even 30 years? This, in my opinion, is the opportunity of a lifetime, which is why, number one, any profits that I make trading the cryptocurrency market go straight into Bitcoin. And number two, you should always have a long-term perspective. Don't let these short-term price fluctuations shake you out of the market. Yes, we trade, we make profits, but the ultimate goal for me is to accumulate as much Bitcoin as possible over the course of every single cycle as it gets more and more scarce and as global adoption continues to ramp up. So let's see what happens. In the short term, as you know, I've been relatively bearish on the price action of Bitcoin, but in the medium to long term, I am a die-hard bull. If you enjoyed today's video, make sure to smash that like button and subscribe, and I'll see you in tomorrow's video.